Ahoy there, trader, and welcome back. Let's take a look at the next big move in metals and mining. Let's look at the charts. Ahoy there, trader, and welcome back. We are looking at the ETF of XME, metals and mining. The initial setup that we have here highlights potentially a huge opportunity, not just on the ETF, but the sector and metals, gold, palladium, silver, and a whole host of different other avenues to explore. But it all starts with our awareness being raised. So just 10 days ago, what I spotted was, over on the watch list on the left, a huge increase in the percentage movement over a 10-day period. And that was my first observation. So I'm not looking up the charts all the time. I'm just trying to zero in on what's that opportunity. So when I'm looking at the charts visually, we can see that there is a movement over that prior 10-day period that I was just describing. So a straight line move. Now, when we factor in the fact that it's now doing something new, what it has been doing, again, is going sideways. We have multiple crosses in the average price. This is one of my 6 money-making patterns. And what we see is that it is consolidating. The average prices are flipping and flopping at least 3 times. We've got multiple crosses. So rather than trying to figure out, is it ranging, I'm using this as a rule-based system to say it is in a consolidation. I don't care what it's called. I'm just going to draw a big box around it and wait for a breakout. Now, it's already happened. So we fast forward a few more days, and I highlighted all my traders to this opportunity. This is what we call a breakout. I spent 12 years just trading this pattern. You've got a nice push higher, a retracement, and we've got to presume that history will repeat itself, and should price continue higher, which it has just done, then this is the first entry opportunity of potentially multiple entry opportunities over the next trending movements. Typically, we can use the initial breakout move. The height of the consolidation can be added to the high of the consolidation to give me a first target. Now, because of this being the ETF, which is an index of the sector, I can also start to drill down on individual opportunities and start to look for those extra opportunities to really take advantage of the sector as a whole moving. We've got again, this top tier stocks. Why are these my top tiers? So why these stocks versus any other stocks? And what I have to do is fall back on my algorithm, which I give freely to all my traders. I can flip this on and basically say, in the last however much data I've got, in this case from 2006, I typically default to 20 years where possible. I can see that we've got a multi-year positive expectancy, a steady equity curve is what I'm looking for. And say, if I'd traded the way that I like to trade for swing trading, which is being described in several other videos, then would I have been profitable over a 20-year period, since 1999 in this case? So this is a good stock for the way that I like to trade, as is, again, just another quick example, Cleveland Cliffs. So this is another stock that is exceptionally favorable. Now, this one's actually in my regular universe. It's that good on a regular basis. You can possibly see why. It's got a steady behavior that produces profits on a regular basis. So this has a perfect criteria for a range reversal, and maybe I can get positioned to preempt the breakout, just like we've done on previous sector plays with the semiconductors, which we've had some exceptional movements, just closed for multiple profitable exits. If you'd like to learn a little bit more about that, just click the link for some further information. And with that said, I will see you on the next installment. Happy trading, and bye for now.